When I came into the office this morning, I was greeted with the headline that Treasury Secretary Scott Bessent and the U.S. Trade Representative were traveling to Geneva, Switzerland. And on Saturday, they were going to meet China's vice chair to have discussions on economic issues. Obviously, with this U.S. Trade Representative there will be some discussion on tariffs and trade. This is good news that the market wanted. If you think about the way the market's been going for the last month, in early April, we had the market kind of almost 20% off its all-time high, on a reaction to what a very severe tariff ideas that Trump had presented on April 2nd at his Liberation Day. From that point of pain in financial markets, Trump began moderating his rhetoric, saying that maybe tariffs wouldn't be that high, et cetera, et cetera. On the optimism caused by that change in rhetoric, the market just went up. We had 9 straight days, 9 straight sessions of gains in the S&P until Monday and then Tuesday of this week when the market dropped both ways. So the market, maybe a little exaggeration to say the market was running out of gas relative to those large gains. The losses on Monday and Tuesday weren't that great, but I think the market, was stalling, if that's less than running out of gas, a little bit. Because we didn't really have any tangible good news to point to. The U.S. does not seem to be close to finalizing trade deals with any of its major partners, and the U.S. didn't appear to be talking at all to China. Well, now we know they're going to be talking to China on Saturday. That's definitely good news, and the market should react positively. And in fact, when I came in the office this morning, I immediately looked at my screen to see how much U.S. equity index futures were up on this good news, and they were only up 0.8%. Not that 0.8% is a small move, but that's how much the market was down on Tuesday. So really, you're not really pushing the market higher at all on what I thought was news that the market very much wanted to hear, and I would have thought shares would have gone even higher. I think the gains, on further reflection, I think the gains were kind of capped by the fact that we have a big Fed meeting today. Later, in the middle of the trading session in the U.S., you're going to have the results of the Fed's May meeting made. We know that they're not going to touch interest rates. They're not going to change them at this meeting. We know that going into the meeting, that the current odds of a June rate cut, meaning next month, is about 30%. So what the market will want to say that somewhere between the Fed's statement, which is the written thing they release, and then Jay Powell's press conference afterward, those odds of a June rate cut go up. Instead of being 30%, maybe they go up to 40 or 45%. That would be a positive reaction for the market. And then, of course, we started the day already in a positive frame of mind because we have those trade talks going, and we'll have another I think after the Fed's meeting is done and the press conference is done, there's a very good chance the market will go higher still. I think that Powell will want to give the market the impression the Fed is ready to cut rates more if there are further signs that the U.S. economy is slowing down. He's got to have to be careful how he says that. It would have been handy for him, maybe not handy for the average American, if the last jobs number that we had last Friday wasn't so good, because he could point to that. But instead, I think he'll just talk about declines in business confidence and consumer confidence caused by worries about tariffs. And as he's talking about that, he has to be concerned that anything he says might be construed as a criticism of the economic policies of the Trump administration. Generally, if you're Fed chairman, you don't want to be seen as criticizing the president. And especially in this instance where the President Trump kind of reacts unpredictably to criticism. If Powell is seen to be criticizing him, you could have some unexpected result from Trump, and that could create volatility for the market. So I think Powell will be on his toes to kind of convey the message that the Fed is ready to cut rates, which should, as I said, cause the odds of a June rate cut to go up. He'll have to do it in a deft manner. But my guess is he's had plenty of time to think about what he's got to say in that question and answer session, and he'll be pretty successful at it. And although his goal is not to make financial markets go up, the result will be that financial markets will go up. Now, what do I see going further on this current rally that the U.S. stock market's in? Well, as I said, I was like everyone else saying at the beginning of the week, well, the market's likely to pull back on the absence of no good news on the trade front. But now that we have some good news, we'll probably, as I said, we'll probably go higher. But ultimately, I think we're going to run out of, I think this thing will reverse again. And it'll reverse at the point where we're far enough away from that pain point that caused Trump to change his rhetoric. So if we see U.S. Treasury yields get back down close to 4% again, if we see the S&P maybe up for the year instead of where it is now, down like 4+%, Trump, we're far enough away from pain in the financial market. Trump might just reverse a little bit on his rhetoric, go back to his true stuff, and start talking tough on tariffs again, and that should bring the market back again. So for now, I'm bullish. For now, I think it's going higher. But basically what I'm saying is I'm not totally convinced that Trump has totally changed his ideas about what he should be doing on the tariff front, and that some tariff worries are going to hit the market again and probably create volatility sometime in the future.